Hi there, I'm going to do a series of different kind of videos. I normally do my sort of weekend company roundup videos where I talk about companies I own, and if they've released news, I update on that. But I'm going to do midweek ones, and well, depending on whether there's demand. Let me know if you'd like to see a midweek video where I do a more educational type of thing, and it could be anything from looking at charts to balance sheets. Just give me a thumbs up if you'd like to see some of that. Just once a week, maybe a Wednesday, I release on a Wednesday or Thursday, and I go through everything from looking at the traits of a Tech 10 bagger to avoidable risks, to looking at charts, to balance sheets. So give me a thumbs up if you'd like that below, and also comment how often, once a week, once a month, up to you. I wouldn't be able to do it once a week, or once a day, I mean, but I can certainly do it once a week. And if there's anything you want me to cover, I will do it. So this one right now, okay, before I start, if you'd like to see some of that, also, if you haven't subscribed, hit the subscribe button and the bell notification. That notifies you whenever I release a video. So subscribe right now and hit the bell notification, and you'll get the video straight to your inbox, and it'll let you know when I'm doing a new video. Okay, so first and foremost, I'm going to look at charts. A lot of people have asked me to do some stuff on charts. I've done stuff previously, so I'll update it. And this is how I set up a chart for technical analysis, all right? Everyone is different, I've got to say that, and I'll cover that in a bit. So firstly, what is technical analysis, all right? Now, it's an attempt, and I say it's an attempt, to forecast future financial price movements using a chart based on the examination of past price movements, and you also look at indicators based on those movements. And I gotta say, it's like weather forecasting a little bit. It's a little bit woo. As an investor, don't rely on just charts. Shouldn't be doing that. But it does not result in absolute predictions about the future. And instead, TA, or technical analysis, can help investors anticipate likely things to happen. It's not going to happen, likely to happen. So it's all about probabilities, about helping you get a better edge, really, okay? Now, it's unlike fundamental analysis, which a fundamental analysis is the analysis of business financial statements, usually to analyze the business assets, liabilities, health, and companies and markets. So you should put these two together. That's what I always do, not just rely on one, okay? TA, or technical analysis, is not the be-all and end-all. Technical analysis is just another tool, for an investor should use to improve their probability of selecting a good investment entry. It should be combined with fundamental analysis, especially on small or micro-cap stocks. I can't state that enough. Honestly, you've got to know. You've still got to do research. A lot of people just use charts to try and shortcut that hard work. You can't substitute hard work, honestly. Technical analysis only works if the fundamentals of a company are performing as expected. I've seen so many people just rely on a chart, not knowing much of a company, and a company comes out with an update that's not very pleasing, not as expected, and it'll smash the charts apart. Throw the charts out the window. If you get some bad results coming out, ignore the technical setup. Fundamentals will always trump a technical setup if it's not performing as predicted, all right? What and what not? Now, I've got to say, technical analysis does work better on bigger, more predictable stocks with consistent revenue generation or FX pairs, Small or micro-cap stocks is very handy, and I'll show you why in future editions if you want me to do more. But because they're growth stocks and they're starting to sort of generate revenue, or they're just starting out, it's a bumpy road. So it's more, unpredictable news. So you often see, someone doing a chart on a small cap stock. This is the way it should go. This is the target up here. And then the company releases news and it goes nowhere near that. It drops to the floor. A TA will not work. So if you see someone doing technical analysis, right, on a small cap exploration oil and gas stock, it's rubbish. Absolute rubbish. It doesn't work on companies that have binary outcomes. Because you can do all the technical setups you want in a chart and try and show something's playing out this way or it will go this way. But if a company, for example, a small oil and gas company, and they've got sort of one well they're drilling, in the next 6 months, and that's all they've got asset-wise, and they're drilling that well, and it's like a 1 in 10 chance of success, and they don't get success, don't worry about the support levels. It'll break through the support. Again, chuck the chart out the window. It's not going to happen. Same with, say, biotech or pharmaceutical companies. If the small cap pharmaceutical companies are going through clinical trials and the outcome is binary, i.e., yes or no, this drug is not going to work or it is, if it fails to meet the endpoints in any of these clinical trials, ignore the chart. Chuck it out the window. The share price is going to go down and break through previous support. So, like I said, it doesn't often work with predictable companies or companies with binary outputs. I always laugh when I see people doing sort of technical setups on small cap companies that are about to head for a binary out, sort of an event that will lead to a binary outcome. I.e., will they find oil or will their drug meet the endpoints in clinical trials? It's not going to work for those companies. So ignore it. So this is my sort of summary. Fundamental analysis should help you select where to invest. I mean, which stock you invest, which sector and all that, by doing research on balance sheets and all that stuff and the end markets and that stuff. Technical analysis should help you select when to invest. So the entry, okay, shouldn't just be the be-all end-all. Unless you're a trader, some traders just use TA on big stocks or crypto or FX pairs, foreign currency pairs, fair enough. But not on small cap stocks. And that's my arena. That's where I like to play. You can't just rely on it, honestly, because they can come up with news. And these small cap stocks, they have, pre-revenue. They are news driven. That means a bit of news will move the share price this or that. It's not profit or, it's not profit driven. You don't have quarterly profit updates. So technical analysis indicators, there's so many. And I'll show you in the chart how many there are. I say here, there's as many different indicators as there are food items in a supermarket. And like a supermarket, you select what you feel happy with. You may need to try a few first. And I've tried so many different indicators. But I keep coming back to, I suppose, a stable of traditional indicators. And I'm an investor, so I may use charts in a different way to a trader. They may use shorter term time frames and shorter term sort of moving averages and all that stuff. So that's a bit different. But these are the indicators that I use, and I'll go through some of these on the chart and how to add them. I use candlesticks. That's the share price. I use simple daily moving averages, and the periods of time are 20-day, 50-day, 125 and 200-day. I use volume on the chart. I like to see the volume. I use moving average convergence divergence, or the MACD as it's called. And I use relative strength index, which is a momentum indicator, and that accounts for a lot in small cap stocks. Okay, let's go to a chart. Okay, so when I set up a chart, this is what it looks like. There's all those indicators I talked about. This is them there. So this is the candles I took. Each candle is a day, and I go into that in a bit. And depending on the time frame, there's a time frame up there. But each candle for this chart is a day. These are moving averages. So you've got the red one is 200-day moving average. The sort of pinky one is 125. The blue one is 50-day moving average, and the green is a 20-day moving average. Okay. Next down here is the moving average convergence divergence, okay? And this is the relative strength index. I'm not going to go in too much detail on any of these indicators right now. I'm just going to be talking about how to set up a chart. So this is, I use TradingView, and I think TradingView, you have to pay for more than 3 indicators. So let's just go back here. So if you had 1, 2, 3 moving averages, you couldn't have this and this if you wanted to keep it free. So I'd suggest if you just want one moving average, as an investor, I would generally use a 200-day moving average. It's a long-term trend, and it's often called the bull-bear line. It's the granddaddy of all moving averages, and generally, when a price is below this, it's a bit bearish, they say. When it's above this, it's quite bullish. You can see it goes into a trend here. But I would add that moving average, the MACD and the RSI, or maybe take the MACD out and use another moving average, like a 20-day moving average. But let's go to the start. So when you first come to TradingView, like I said, I pay for TradingView, by the way, and you get free, I get prices on there as well, live prices, and you get alerts and stuff. But you can also go to investing.com for this same kind of chart, and I think indicators there are free, I think. So I don't know why I pay, actually. But no, I do quite like the format of TradingView a bit better than investing, and it's got a few more features on it as well. But I'll put the links to both sites below in the description box. All right, so you can click on those. So first of all, this is what you may see when you first set up a chart, or you just open a chart on TradingView. Very basic line area chart. Like I say, it just shows basically where the price has been. This section here is the price below, and each day is joined up by this line. You can see it's 225 is the price at the moment. It's been up to 340, and across the bottom here are the dates: February, let's see, March, up the side of the prices. And so it doesn't give you a lot more information. You can see the price has gone up, it's come down, it's relatively sort of just below halfway at the moment. That's it. So how do you set up a chart? Let me just go to the home page, because yeah, so when I come in here, I hit this. So first of all, that's the basic line chart. So first and foremost, what I do is I make sure we're on a daily time frame. Okay, that's the time frame I look at. You can change this to monthly, weekly. And I'll show you the difference in candles. Then I go to this bit here, the area, and I hit candles. Straight away, you can see candles there. All right. Now each one of these candles represent a day. Green candles means the share price has gone up. Red candles means the share price has gone down. Now, what are these little tails on them? Right, for example, let's take this day here. It's the 20th of February. That's a very bullish day. The share price opened here at the bottom of the candle, closed right at the top. So you can see these figures up here. If you put your finger on a candle there, you can see the O, which is 2.7, the open. It opened at 2.7. And the C, across to the right here, it'll show you, is 2.9. That's exactly the same as the high and the low of the day. That means it didn't go up any high, didn't go any lower. It's quite bullish because it opened low, closed high, went up to the top, from the top, and that's quite bullish, see? So the close and the open are the same as the high and low. That's quite bullish. This green has gone up. So what do these little tails mean? That is the daily range of the candle. So if we look at this one, you will see the close and the high and the low are different from the open and close. So the open, basically it opened here, the bottom body of the candle. Okay, it closed here, but during the day it also went down here as well, the share price. But the body is the open and close. Okay, but that's the range of the candle. Now let's go to a red one. So if I give you a test, where did this open and close? You can look at the text up there, or you can realize, because it's a red candle, it's closed lower than it opened. So it opened here, as opened an all-time high at 3.51. It went down to 2.74 down here, but closed at 2.8. See, that's the tail there. And each candle tells a little story. There's different patterns. You can get books on candles alone and candle setups and all that stuff. So they'll say this long tail candle, for example, and when it goes up, that's quite a bullish sign for the next day, because like a cork in water, it went all the way down, come back up. So basically it got sold off, and the bears bought it back up, and it ended up a little bit higher. It's a big range, and there are different names to these candles. And do you know what? As an investor, long-term investor, traders need to pay attention to this. I don't really pay too much attention to the pattern of the candles. I don't. I look at longer-term trends than that. These are more short-term, and investors will know the names of these and what they mean. But do you know what? It's very questionable. I've seen bullish and bearish candle formations, and the next day's trade hasn't followed up. Again, it can be news-driven with small cap stocks. So first of all, we've set this up. Okay, it's candle. The next thing I want to do is I want to go to indicators and put in my simple moving averages. Look at this. When I said earlier on, it's like a supermarket full of ingredients. These are all the indicators. Phenomenal. Ridiculous, you know. So there's even moving averages. So many different ways of exponential. There's weighted. I just go for simple moving averages. Do you know why I'm simple? 1, 2, 3, 4. I've hit 4 there. And the default up here is 9. They're given different colors. I like to change these. So you've got the little cog here, settings, all right? And you've got inputs. I like to go at 20. Style. I like that in green. So there. And you can do thickness as well. So if you want a bit of thickness, there we are. So straight away, I've got the green one, a 20-day moving average. That means basically the share price is averaged over the last 20 days and that's the line it forms. Okay, so every day it goes forward, they take the next day, chop one off the end, 20-day moving average. Let's go to the next one. I want to set the 50-day moving average. So inputs 50, and these are quite classic time frames for moving averages. You know, I like this in a nice sort of deep blue, deepish blue there. Yeah, let's have a look. 50 style, thickness. I want to go that. I tend to get thicker as I get older. No, I tend to get thicker as they get longer. These moving averages, because they're more important, I feel. I also like the 125. This is not very common. The 125. I had a guy on who was a deep data miner, a charter, and he recommended the 125. He said, "Have a look at it." And I did. I looked at it. I spent days looking at the 125, and it played out very well. Sometimes better than the 200-day moving average. And last one, I'm going to put it in red because it's the granddaddy of all moving averages, or the grandmummy. Don't want to be, sexist anyway. 200 style. I want it thick because this is a biggie. And there we are. So these arrows at the bottom, you can zoom out. And as you can see, the shorter time frames, the share price will cross. There's different ways of looking at reading moving averages. You can say when they cross, the 20-day crosses the 50, or go the other way, it's a silver cross. When the 50 crosses the 200-day moving average, the gold cross is quite bullish or bearish the other way. But that's, I'm not going to go into them right now, but that's setting up the moving averages. Next, indicator, I'm just going to set up the MACD, the moving average convergence divergence. And I go into why I use this later. And I don't mess around. I don't want it that big. I don't mess around with the settings on this tool. I leave it at these settings here, okay? And then next indicator, last one I put on, is the relative strength index. There. And again, the period default here is 14 days, and they measure the relative strength over a 14-day period. That is default, and I leave it as that. And again, I will cover the relative strength in a bit. But that's how I set up, and then basically I got the top there and save it right here. Just save the thing. In fact, can I just move myself there? So you can save it there. So you rename and just type in there and save it, and it'll save it for later. Obviously you have to log in and stuff, but it'll save there for later. Hopefully that makes sense, and that's how to set up a basic chart. I hope that helped. By all means, give me a thumbs up if you'd like to see more of these kind of videos, okay? If you haven't subscribed, I can't say this enough. Subscribe, please. And if you do, I'll do more of them. Hit the bell, and you'll be notified. So you have to subscribe. And if you subscribe, you'll only see my videos when you're on Google. It'll come up in your feed there. But if you hit the bell notification, you'll be told when I upload a video, so via email. And like I said, it's once, maybe twice a week, depending. So if you liked what you see, you want more of this, thumbs up, please, and share it if you could. And also, below, like I said, comment weekly, monthly updates. What would you like? And also, by all means, suggest some topics. I will be going through those indicators I looked at on the chart individually. I'll also be going through a couple of other topics I've got to cover in small cap stocks. So more educational and more kind of, sort of that side of it. I'll still do my weekend updates on companies I own, but this is a more educational approach, if I can say the word educational. Thanks for listening or watching. I do appreciate it. Don't forget, share, please, thumbs up, comment, and subscribe. Hit that bell. Hit that bell, man.